What's going on, y'all? Welcome back to Won't You Be My Neighbor with Brandon from Vegas. I'm your host, Brandon from Vegas. As always, we're here with my co-host, the legendary, the one and only Mr. Bill Gaylord, rocking that Golden Knights polo. How you doing, Bill?
I'm doing awesome today.
How'd you feel about Game 2? I wanted you to come watch with me at Mackenzie River, but you're a busy man nowadays.
They are going to do really well tonight. They're going to kick some ass. I think it's going to be so much fun.
Do you think we sweep? Do you think we sweep them in Florida?
God, the way they played on the last game, unbelievable. I think they can.
Yeah, 7-2, right?
Oh, my God. They just they're rolling.
Yeah. As someone who's been in Vegas for a long time, is it crazy to see a Vegas team not just be good, but be like this good? Oh, it's a little weird.
Well, think about it. I mean, 2 out of the last 5 years in the Stanley Cup for a startup hockey team.
Yeah. When we went to we went to not Stanley Cup Finals game 1, but the Dallas game 1. And it was Edmonton Oilers. We were sitting next to this couple from Edmonton, and they were running their mouth, blah, 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 blah. And I looked at him, I said, does it feel weird that not a single team from Canada has made the Stanley Cup and we've been here 2 of the past 5 years? That ended them real quick. They had nothing to say.
Unbelievable.
And now we actually have one more guest today. My man, Robert. Robert, what's going on?
Go Knights, go. We're doing this whole episode in ASMR.
ASMR podcast. Let's do it. For those of you guys who don't know, Robert is actually the videographer. He's really special to me. He is the videographer that got me into start making videos. He actually filmed my first ever YouTube video, and it was because of him that I was like, man, I should start doing this social media stuff. This video thing seems to be pretty fun. So thank you for that, Robert.
You're welcome, man. If you scroll down to the YouTube, you can find it.
Yeah,
your YouTube.
Yeah. It's my first ever YouTube video posted. So after you watch this video, go to my videos, look at the Inspirata video, and when you watch it, it's Robert. He's the one who made that thing come true. So thank you.
That's a great video.
What's that?
Robert and I are gonna have to have a turf war here.
Turf war, yeah.
This is a collaboration.
As a former and current videographer and former videographer, now producer.
Yeah.
Like I think we're gonna have to arm wrestle.
We're gonna team up.
You've worked all roles, man.
I've worked everything. At this point, I'm probably gonna be your chauffeur at some point.
No, bro. Soon you're gonna owe me, bro. Sticky Paws is growing. So the reason we brought Robert in today is because he's willing to get personal with us, right? We always try to keep the conversation here personal, share our life stories, how we got here, and why real estate is more than just housing and numbers, right? And Robert has an incredibly personal story he's going to share with us. And it just so happens that Bill was a huge part of that story. So it's like a family affair we got going on here. So Robert, tell people a little bit about yourself and how you got from there to here.
Yeah, I was originally from California, working in broadcast TV from 2003 to 2016. Moved back with my parents, cashed out my 401k, moved to Vegas, went bankrupt when I was 38, got depressed, joined their team, the Gaylord Hansen team. They're a mortgage team, as a content creator. I was their content director of content. And then I started to accidentally getting educated with real estate, with finances, and then bought a home in 2021.
What do you mean by accidentally educated?
Well, when you're shooting content for people, you're just listening. You know, I'm doing the videos, I'm doing reels, I'm doing podcasts like this. And then I started understanding what credit was, what FHA loans were. I didn't know any of that, dude. I was like just spending money like a crazy guy, right? Okay. Zero financial background. Didn't really understand how credit worked either. So all of that stuff, just being around realtors like yourself and Bill, actually got me educated. And then one day I was like, God, can I do this? Can I buy a home? And then I applied with Bill. He's like, you just got to apply, fill out the application, and then we can see your financial profile.
Yep.
And I was like,
Snapshot.
all right, yep. And I'm like, is it going to hurt my credit? The biggest fear was like, is it going to mess up my credit? And they were like, no, it doesn't. You're just going to run your credit. That's it. And then I was shocked when the lending team was like, you can afford, but you need to fix a couple things, so it'll take you a couple months, and then you can get a home.
Yeah. It's
I was like shocked.
Yeah, I think that's shocked and scared are literally, I think, the two biggest emotions involved with this, right? And you can attest to this. You're scared at first because you've never been financially responsible, you've never tracked any of that stuff, and now all at once in your 30s and 40s, you're like, I got to figure it out right now, right? And then you get that financial snapshot, and someone like Bill goes, hey, honestly, with a little bit of work, we can get you in a home. And you go from fear to like, what the fuck took me so long?
Well, also, I was shocked on how fast that the application, I sent an application. Within like 30, 40 minutes, just Bill sat with me, and here's your plan to get a home.
Yeah.
In 30 minutes. And like my whole life, I was, this was 41. I was 41, okay, when I did this.
It always shocks me how young you, like, dude,
I know.
it will, every time as you're talking, I'm like, when he was 38, I'm like, my guy looks like he's 25 right now.
38 bankrupt, living with my parents at 38, 39, still living with my parents, zero, like nothing, right? And then 41, 2 years later, after rebuilding my credit, I'm able to get a FHA loan, which is a 3.5% down. And the down payment was probably less than $20,000.
Yeah. And now you own the home. Right?
The mortgage is like $1,600.
Bill, from your Jesus, when you tell people that part, that's the part that's really gonna hurt, right?
Yeah.
That's
Well, this is Vegas, right? Vegas, I couldn't do this in California.
Sure.
I'll say that. Like, where you are depends what you can get, right?
What was your rent you were paying in California that you told me? What were you paying in rent in California?
In 2010, me and my business partner, now at the time we were just making a ton of money in Hollywood, being stupid in our 20s, or in our his 20s, my 30s. The rent for this 3-bedroom apartment was $3,400. 2010 or 2013.
$3,400 in 2013.
Yeah. That house was worth about $700,000. The owner was like, would you guys want to buy this when you guys leave? We're like, nah.
Yeah, that house is $1 million house right now.
It's 1.5 million now.
Yeah. Unbelievable.
Yeah. I cashed out my 401k. It was like $50,000 and decided to be an artist and went bankrupt.
Man, the fun things we do, right? The fun thing, you know what's funny? My personal story is dramatic, right? Because I wasn't a big Hollywood producer, right? But I was working
You're Brandon from Vegas.
Well, I wasn't that guy, right? I was working in nightclubs, right? And I would make a big tip. I'd hustle all night, make like $3,000 in tips, right?
Oh.
Finish tipping off the cocktail waitresses and all the rules in Vegas. And I would take that $2,500, $3,000, and before I left the casino, I'd be broke.
God.
I'd be broke.
Oh,
I'd put in some
dude.
sports bets. I'd play some blackjack, and all that money I worked for would just be gone. Would be gone. And I'm like, I probably gambled away a down payment on a house. Like I probably gambled away a down payment on a house.
Totally. I loved with Robert, like we would do the some reels, and Robert would say, I don't understand that. What did you just say? Can you explain that again? And so that's kind of how you got educated, was just by going through some of the videos that we did and just understanding and learning what it was. And and the biggest fear, as you know, is like sometimes it's embarrassment. They don't want to show their credit because they're like, oh my God, I got to clean this up before I show it to somebody. We've seen every type of scenario possible.
You know why it's scary?
And it's just very scary. And they want to clean it up themselves because they think that, they're not in a position to buy. So they think, well, if I fix it, then I'll be able to go. So they try and DIY it, and it doesn't work.
You end up in a deeper, you used the word earlier that people don't touch on with real estate, but you said depression, right? And you end up in this financial depression where you're so ashamed and embarrassed of your financial decisions that you put yourself in an even worse financial decision. You're like, oh man, I lost so much money or spent so much money. I guess I'm not going to try to fix it or make more money, right? You just keep sinking further and further into that hole.
Yes.
It's a dangerous cycle, man. And I'm glad you brought up that word. I appreciate you being so honest with me, honestly. Because I couldn't have opened up like that without you saying something first.
Well, and it's true. And I think part of it is Robert's out to help people.
Yeah.
And we talk about bankrupt to homeowner in 3 years.
Yeah.
And it's just incredible what he did and realized it, understood it. But sometimes you just have to have a little bit of education, a little bit of a push, and to take that first step to say, okay, I need to build a game plan to get to where I want to be.
Yeah. When did you know that it was something you really wanted? When did owning a home jump up your value scale where you were like, I'm going to put this above all the other things in my life?
When I applied.
When you applied?
When I applied, and I was like, oh, I can afford this house. Here's the thing. When Bill's like, people are scared, and people just don't know to reach out, I think. They don't know to reach out to their credit people and talk, because there's a human on the other line that actually will talk to you, that's the surprising part. When, you know what I mean? People think it's like this robot, or I don't know. Like, I think to answer your question, when did I want, what was your question?
When did you know that this was the most valuable thing in your life, right?
Yeah, when I applied, was it when it got real? I'm like, oh, okay, there's an actual plan now, like a financial plan, and it's not like this fake little dream.
Yeah.
And even though it took a couple months, right? We had to kind of fix some things on my credit, my DTI, my debt to income ratio, to make sure I can afford the home.
Yeah.
Right. And then we just had to cinch up some things. But the only way I knew that was talking to a person like Garrett and Ali on our team, like real people. They were like, oh, you just need to do this. I'm like, okay, I didn't know that.
Yeah.
But, you know, most people think it's like a robotic thing, like apply now, you get one transaction and then you just get words.
Yeah.
So like you have to understand that everybody's situation's different, and they're not just going to give you a mortgage. They have to understand, okay, you've been paying that much, you have a car payment, okay, this is what's your goals. Like our team asked, that's the first thing we ask is, what are you trying to do? Are you trying to be an investor? Are you trying to use this house as your like step up home, or is this your like second home? Like we just ask the right questions, right? It's not a one size fits all.
100%.
No, it's building a financial story. It's basically, what is the story? Where are they at now? Where did they move to? And can they afford the home right now?
Can they afford the home right now? And if not right now, what's it going to take for them to get to that point, right? And I think that is almost, I tell people, there's nothing bad that can come from speaking to you. Nothing bad. Either you're going to tell them, hey, you actually can afford a home right now. Or you're going to say, B, if you follow these steps, you'll be able to buy that home within a year. And that's what a lot of people are missing that you mentioned, is those steps. How do I get there? I know I need to do it, but there's no book on this. What's my lead, you know?
Yeah, and I have a client right now, credit score. The biggest thing that I'm so impressed is the person made the phone call. Said, Bill, I need your help. How can I get into a home?
Yeah.
Said, first step, financial snapshot. Let's do an application. Let's see where you're at right now. Got the credit report. Credit scores are in the mid 400s, which is like that's low, right?
Sure.
But you can see the potential for them to improve their credit by at least 75 points, like right out the gate. There's a couple little tweaks. Now they're not that far away from getting the ability to get into an FHA within probably about 9 to 12 months.
Man, I knew by talking to you guys, it would open up the doors to some great conversations. When you're in credit, a lot of people, they're in the 400s or 500s and they're panicking. They're like, how am I ever going to get to 750? Dude, the jump from 500 to 650 is the easiest jump. It's usually just paying off old collections, making sure you're consistent. It's hard getting from like 700 to 800. That final stretch, you need 4 years, you need time, you know. But that stretch from 400 to 600, that's the easiest stretch, right? My credit was in the shitter. Am I allowed to say shitter? I guess it's my own podcast.
You guys have said ass and everything already. So what difference does it make at this point?
I'm a realtor for the people. My credit was zero, right? I got in some real bad credit debt in college. Had a family member help me pay it, but then I was so scared of credit that I just literally was like, nope, never gonna touch it again. So from my early 20s to my late 20s, I never used a credit card.
Yeah.
I never used a credit card.
And that hurts your credit too.
And that hurts your credit even more.
Being bankrupt too,
Yes.
you're at zero, right?
You're at zero.
That's what we're talking about. Being the bankrupt was the same thing. Like you're wiped out.
Yeah.
You know?
What was for you, and if this is too personal, you can tell us to stop, but
Robert?
what was the scariest moment for you? When was the bankrupt button like, when did you know you had to hit that button?
When it was probably like $40,000 in debt, right? So I'm like, all right, I'm not making any income drawing these pet portraits as an artist.
Yeah.
I had a little booth at the swap meet and I paid for a booth, and that was the moment where nobody bought an art with me for a month. I was at the swap meet off Decatur.
Okay.
Had a booth, paid $800 out of pocket. And they're like, oh my God, I got to pay another $800. I haven't sold one piece of art. Like, people at the flea market want to haggle you for $1. So that was the moment. I'm sitting in a booth in the swap meet being like, I'm going to have to go bankrupt here.
And and when you press that button, did it feel like relief, or did it feel like
It was kind of cool because I drove the car
Yeah.
to CarMax and just left it there. Peace. Boom.
So there was some moment of relief, right?
It was
There was
super, yeah. Because I had talked to people about being bankrupt, and they're like, okay, it's it's a tool that you can use to restart yourself.
Sure.
And then you have to just buckle down for a year, and they're not going to give you any credit cards. They're not going to approve you for anything. The first thing you need to do is get a secured credit card, meaning you got to pay $300 of your own money to a credit card company, and then they start rebuilding your credit.
Yeah.
Or you start rebuilding your own credit.
Yeah.
So I did that for a while.
Oh man, I was a secure credit. Which one did you go with? Did you do Capital One? Did you do
Once I was like Open Sky.
Okay.
Yeah, Open
Okay.
Sky. So $300. And then the next thing I did was actually get a car payment. They let you have a car.
Yeah, they'll give you
With a super high interest
Pretty
rate.
high interest
Oh my
rate.
God,
I
my interest
remember we
rate was
talked
so
about
high. I'm
that,
like,
yeah.
Bill, my interest rate in this car is like killing me.
What would they charge you $1,000 for a Corolla or something like that?
I forgot, man. It was crazy.
We
Car
looked at
company.
it. It was really
Yeah,
high.
it was a pretty high one.
Yeah. Is that something the first thing you dove into was like, hey man, this is messing up your debt to income ratio?
Yeah, no, absolutely. And I think that we adjusted the car payment to get it down to a little bit different level that his debt to income worked.
And the first thing Bill said to me is don't pay off collections, right? Like hold off, don't pay your collections because that can actually damage your credit.
Yeah, buddy. Tell them about that. Seriously. People think I'm crazy, but tell them.
Well, so a collection account generally pops up and you don't.
Put your mic up.
Oh, put the mic up.
Yeah, there you go.
Is that better?
Yeah.
Okay. So, and you essentially don't want to pay it because the longer it sits there, the less impact it has on it. So it kind of goes away, not necessarily go away on your credit, but when you go to pay a collection account, it then becomes current again. And so then it looks like it's a brand new collection account because you
Wow.
brought it current.
Yeah.
And so current.
What does that
like
really
new-
mean? What does that mean? Like explain that, Brandon, in like the simple term.
So I literally just went through this. So
Yeah.
I got you. I had like an old hospital bill for like $1,200. And I haggled the guy. I said, listen, I don't got $1,200, but I can give you $500 right now. And he was like, sure, we'll take $500. Better than zero. And I paid it thinking, yeah, my credit's about to, woo. And my credit dropped 23 points.
Yeah,
Because I paid it off and it brought it back up as a new charge.
correct.
Because the banks look at it as like a new thing. Is that
Yeah,
how it is?
it looks, because it's just brought up to the top and it says, oh, you've really said that this truly is a collection account. It is a problem. And
Yeah.
you recognize it. So if you're ever paying off a collection, you can negotiate, but always, always, always try and get a removal letter as opposed to a settled letter.
Repeat that again for people, man. Austin, we're going to definitely put this one on the board. Bill Gaylord's tip of the day. What lay it
Tip
on
of the
him.
day, if you're paying off a collection and you're going to settle it to get a removal letter that it never happened as opposed to a settled letter. Because then you can use that letter, send to the credit bureaus, and they will take it off your credit report.
So is that a phone call?
Oh, yeah.
To
And
the
it's-
creditor.
It's a haggling. Some will do
Got
it, some won't. It's a negotiation, but you want to try and get a letter that says this never happened.
People don't understand that they can do that though.
Yeah. People don't, man. When it
Like I
comes-
didn't know that. Sorry.
People
to
don't
interrupt.
know. People don't understand. You could have just left it at there. People don't understand. Like just period. That's a huge reason why we're doing this. We're not teaching. This is real estate 101. This isn't real estate 505. We're not teaching people reverse mortgages or HELOCs. We're teaching people just, hey, there's people out there like Bill willing to help you. Talk to him. He's not a robot. Just understand what his job is and understand what he needs from you, right? It's just understanding.
Yeah, and credit is a game. I call it a game, and you have to know how to play it. And it's like your FICO score is your jersey number.
Yeah, it's like your
And you
scarlet
want-
letter.
right? You got to wear it, and you got to be proud of it, and you got to try and get that up as high as you possibly can, and understanding it. Personally, I subscribe to Credit Karma. I know we've talked a little bit about
We've
that.
had beef
You
over
don't like
Credit
that?
Karma. We've had beef.
I personally It's a free service for me. I like it. It gives me updates on what my credit score is. I don't like all the ads that comes out with it, but it gives me, at least keeps me on track.
Sure. I like the one free Experian. What I tell people is
Experian's a great service too.
yeah. I tell people, have you done your one free Experian check for the year? Yeah. Okay, great. Talk to Bill.
But do it. You know, Credit Karma, Experian has a service as well. It updates you honestly 2 to 3 times a month. And if you run into a problem, you're going to know that problem right away. And then you can go, what the hell did just happen to my credit? And you can find out if your balances went too high, or you maxed out, or something crazy just got popped onto your credit report.
Yeah. One thing I want to finish with is you said at the beginning, but I want to bring it up now. You said you were bankrupt 3 years, got an FHA loan. Is that the time period between a bankruptcy and an FHA loan?
Technically 2 years.
2 years.
2 years.
2 years.
Yep. And sometimes hitting the reset button, we don't always recommend bankruptcy, but there are certain situations where it can benefit you long term.
Sure, but just people, I want everybody who watches this to know, if you do the bankruptcy, right, you can get a loan, but there is a 2-year waiting period before they'll give you an FHA loan, and it's 3 years for conventional.
I think it's 4.
It's 4.
4 for conventional.
Yeah, 4 for conventional. But the main thing after, if you are in that situation, everything has to be spotless.
Yeah.
And with Robert, everything was spotless.
What do you mean by spotless?
No collections.
No collections, no late pays, no nothing. You have to be responsible with your credit from there on.
Okay. So you get your one free, you get
a
your
free
do-over,
pass.
you get your
You get a
do-over,
do-over.
but the expectations for you and the standards for you are now higher, and you're going to get some bad interest rates until things start to get cleared up, right?
Correct. Yep.
That's good. It's good. And now, I mean, do you mind, you've been so personal so far, do you mind sharing what you bought your house for and what you think it might be worth now?
I think it was under 300.
Okay.
It's probably like at 340 now.
I think
for the Zillow
I
estimate.
think it was like right around 300 and
310.
it is 310.
Yeah, something
and
like
I think
that.
it's about it's
350. Yeah.
So you went from bankrupt to now you own your own home and you've got 30 to 40,000 in equity in the home that you own.
Yeah, I mean, we have to do a whole different episode on just like the savings of the home and the equity that you build as a first, because that was a mind-blowing thing for me.
Yeah.
Like I didn't realize like there's principal pay down and all that stuff. Like part of the payment, part of it goes to the interest and part of it goes back into the home, and then that's how you build your equity and blah blah blah. And then you get appreciation of the home, and it's just like, holy crap! I've been paying rent for 20 years. I didn't understand any of this stuff.
None of it.
Yeah.
None of it. None of it. You realize every time they jacked up your rent, you
Yes.
could have been making a bigger and bigger home.
You're
every
paying
time.
100% interest on rent.
100% interest every time. Let's finish with real estate tip of the day, man.
Okay.
Robert, thank you for being so open and candid. Honestly,
course.
that's the kind of transparency that we've been aiming for and searching for, and I genuinely appreciate it. That's a lot to tell people and share with an audience. So thank you on that. What would you say for someone in your situation where you were 3 years ago? What's the best tip you could give them?
I think you need to call a loan officer, a realtor, or anybody who can guide you to where you want to go financially, especially if you're not financially literate. You know, talk to people who own homes. Talk to people how they got their first home. Like, just talk and be curious so you can understand where to go. Because if you just sit and be scared, it doesn't make any sense, right? Like you're not making any action.
Yeah, quit trying to do things yourself.
Yeah.
It's the hardest way, right?
Yeah.
Bill, what would you say your best real estate tip is for people who are maybe bankrupt or struggling right now with money and credit?
Credit is a game. Know how to play the game. It's your 3-digit number. Get educated on it. Understand the simulators that can improve your credit.
Sure. And my tip is going to be along with Bill's and Robert's. Don't call me. Call a mortgage lender. I'm being honest with you guys. I know looking at houses is fun. I know talking to me can be fun. I know having me show you all the nicest remodel houses is fun. It doesn't get you one step closer to owning a home. Until you speak to Bill, until you get your pre-approval, until you're willing to put that work in, you're no closer to owning a home than the person who's sitting up at night watching Zillow. You're the same person. You're window shopping. All right? Take that step. Don't be afraid. Don't let your depression, your anxiety, your nervousness hold you back. Talk to Bill. He's a comforting guy. He's easy to talk to. It's easy to get you guys started. All right? Thank you, Robert. Thank you, Bill, for another episode. We're going to go live on YouTube and some other social media platforms, and we're going to play our favorite game called Ask a Lender, where you guys can ask Bill anything you want. So if you're tuning into the episode, stick tuned on the YouTube Live, and we're going to get some questions answered. As always, I'm Brandon from Vegas, and come be my neighbor.